The US dollar and Japanese yen are staying in tight range against European majors as consolidations continue. Meanwhile, global equities are weighed down by the US fiscal cliff impasse. Risk aversion pressures commodities and sends the Canadian and Australian dollar lower. Fiscal talks remain in deadlock as the year approaches its end. House Speaker Boehner said after announcing the vote was cancelled that the House did not take up the tax measure today because it did not have sufficient support from our members to pass. He also said that it is up to the President to work with Senator Harry Reid on legislation to avert the fiscal cliff. The White House criticized that the Republican Party's plan was a major step backwards and pointless political stunts. Reid also stated that if no pre-Christmas deal is done, the Senate will return to work on December 27. The next Bank of England governor, current Bank of Canada governor, Carney, said that nominal gross domestic product targeting could be a more powerful tool for central banks in extreme economic conditions. Carney did express his support for the flexible inflation targeting framework in Canada. But he also noted that stronger policies are needed in times of major economic downturn. He noted that, under nominal gross domestic product targeting, bygones are not bygones and the central bank is compelled to make up for past misses. And, when policy rates are stuck at the zero lower bound, there could be a more favorable case for NGDP targeting. Meanwhile, such an approach was criticized by analysts that if the underlying reason for sluggish growth is a structural problem, such monetary policies would fuel inflation or asset bubbles. On the data front, UK GFK consumer sentiment deteriorated to -29 in December versus expectations of -25. German GFK consumer sentiment unexpectedly dropped to 5.6 versus consensus of 5.9. UK Q3 GDP final reading would be released today and is expected to be unchanged at 1% quarter-on-quarter, while public sector net borrowing and current accounts will also be released today. The Canadian dollar is notably weaker today and some important economic data might trigger further volatility. Canadian GDP is expected to show 0.1% month-on-month growth in October, while CPI is expected to drop to 1% year-on-year in November. Core CPI is also expected to drop to 1% year-on-year. From the U.S., personal income